What's up, crypto community? In this video, I just want to share a couple of articles with you all. So let's get right into this. Institutional investors continue foray into crypto, yet prices remain low. Amid 2017's roaring bull run, which saw the crypto market's value swell from $20 billion to $800 billion, institutional players such as hedge funds and endowments were evidently hesitant to step foot in this industry. But now analysis done by Morgan Stanley indicates that institutions have begun to accumulate crypto en masse, presumably due to the fact that cryptocurrencies are still situated in the bargain bin. This is something I've talked about on this channel a little bit, that, institutional money is gearing up to enter into the cryptocurrency market. There's a lot of the foundation for cryptocurrencies and digital assets is kind of being laid all over the world, and once that foundation is right, then the institutional money will enter into the market. If you look at the current market capitalization, it's only $212 billion. There's definitely going to come a time when the market cap sits in the trillions, and that's when all of the institutional money begins to flow into it. Regulation and all of this stuff has to first happen, and the groundwork kind of has to be laid, and once that's done, then that money is going to flow in. The virus is spreading. Institutional money pours into crypto. The widespread arrival of institutional investors has long been seen as the holy grail for the crypto industry's maturation, and surprisingly, despite bearish market conditions, a report from Morgan Stanley has outlined the fact that this holy grail could be rapidly approaching. Discussing a recently released Morgan Stanley report which was titled "Update Bitcoin, Cryptocurrencies, and Blockchain," Alex Kruger, a world-renowned Argentinian market specialist, claimed that there have been considerable institutional inflows since January, alluding to the sentiment that today's crypto's asset values are ripe for the proverbial institutional picking. However, citing data revealed through the 50-page document from the legendary financial institution, which gave a deep dive of the current state of crypto, Kruger added that it isn't cut and dried. The industry savant, who made a graph seen below to convey his thought process, explained that institutional money in cryptocurrencies, which reportedly tallies to $7 billion, only makes up 2.8% of July's collective market capitalization of all cryptos. It is important to note that this figure has declined since January 2017, 3.8%, indicating that retail investors quickly outpaced their institutional counterparts in the past 18 months. Regardless, institutional market penetration, as Kruger dubbed the statistic, is still up drastically when compared to January 2018's dismal 1%, further supporting the theory that institutions have continued to pick it up where retail has dropped the ball, so to speak, and this is just displaying that information. I'm going to continue reading here. Backing his analysis with figures, Kruger pointed out that while institutions' crypto assets under management only visibly increased by $1.25 billion between January and July 2018, prices fell through the floor during that time. Explaining the significance of this caveat, the researcher estimated that $5.9 billion actually entered the market via the pockets of Wall Street bigwigs, making it likely that institutions have thrown upwards of $10 billion at crypto assets in recent years. To put the jaw-dropping sum into some much-needed perspective, Kruger explained that $5.9 billion is comparable to 237 days of block rewards issued by the largest coin, which report amounted to $24.8 million per day as of July 1st. However, despite the influx of institutional capital, which would presumably catalyze a bull run, the market has stayed quiet. With bears and bulls remaining caught in a near-endless standoff, this could indicate that institutions are only buying enough crypto to keep this market afloat, as retail interest has all but dried up, save for the diehard hodlers and long-term players. In my opinion, I should mention I'm not a financial advisor, and I'm actually like a noob to cryptocurrencies, so you should take what I say with a grain of salt. However, something that I personally do, and the reason I got into XRP in particular, is because I like to look at other YouTubers and other institutional investors and see what they have to say about cryptocurrencies. I do recommend you go check out Digital Asset Investors channel as well. He was previously a Wall Street advisor, so he has a lot of good information. And when we're talking about this here, this institutional money is going to enter the market. Cryptocurrency exchanges are like popping up all over the world, and there's just so much room for growth and maturation. And once regulation is at the point where institutional investors want it, then they're going to flow into it. Nasdaq is launching its own crypto desk. All of this stuff is happening. I think it's just going to take years for it to really show. So I'm going to continue here. OTC desks, not crypto exchanges. More optimistically, however, the non-action of this market could indicate that institutions have been siphoning their capital into crypto through over-the-counter desks, not via traditional order book style platforms that can be decimated by multi-million-dollar trades. As reported by News BTC, according to Bobby Cho, the global head of trader at Cumberland DRW's cryptocurrency trading division, hedge funds continue to issue a multitude of over-the-counter Bitcoin transactions, which are often over $100,000 per transaction. Cho explained what this fact meant, stating, what that's showing you is the professionalization that's happening across the board in the space. The Wild West days of cryptos are really turning the corner. Although this is all well and good on its own, Cho wasn't the only industry insider to be spectating such transactions. Boston-based Circle corroborated this claim with CEO Jeremy Allaire telling Bloomberg that Circle Invest has been seeing triple-digit growth in the number of individuals enrolling into its OTC business. So for now, it seems that bull watchers will have to sit on their hands until retail buying pressure picks up. It's going to definitely pick up. In my opinion, we are going to see another bull run, and I think it's going to be far greater than the one we saw back in December 2017. There is a lot of money that's still waiting to flow into the market. That foundation is being laid for blockchain tech, and the reason I think blockchain technology and cryptocurrencies aren't going anywhere is because if you take XRP, for example, which is like the best, cryptocurrency out there, and you send it to somebody, you realize that within seconds that transaction settles, and it also settles for fractions of a penny, and that's really efficient. You can move value across the world with such ease, and I think that is why this is so huge. And with XRP in particular, it's highly scalable. It has that real world utility, and it has all of these components that really kind of set it apart and also make it just a great investment opportunity, in my opinion. Now here's just a little other piece from this article I want to share. The blockchain of Ripple's technology allows this transformation using crucial properties of speed, accessibility, security, trust, and transparency. Ripple partnered with the PBG Group for e-metals. This company reports how the system works, saying combining the performance of the London clearing system managed by London Precious Metal Clearing Limited with the transparency of an exchange-traded asset. This company is well known for its refining operations of metal. However, it is also involved in recycling, management, and trading. Will Ripple overtake gold next year? With the platform, many people are speculating on whether the cryptocurrency can overtake the gold market. J.C. Collins, philosopher of metrics, I recommend you go check out that website, Philosophy of Metrics, as well. Philosopher of Metrics writer argues that XRP will lead cryptocurrencies next year in this regard. Collins explains that the rise of digital currencies has opened a new asset class that will also encompass stocks and bonds in the future. I think there's going to be a type of integration between stocks, bonds, and digital assets in a way we couldn't have really imagined. I think it's all going to be, really interconnected at some point. They will be traded through the blockchain and global liquidity. The relationship between Ripple and gold. Gold is currently the most popular metal in the metal market. When it is invested, it diversifies risk when it comes to such financial holdings. Gold is a popular safe haven for times when there are economic events which affect investors negatively, such as inflation. This is because it has relatively low volatility. Also, gold's value has stayed stagnant compared to so many other assets on the market. The cryptocurrency market right now is super volatile, and that's because there's only $212 that make up the entire market cap. But once that market cap increases, then that volatility is also going to stabilize out. But I think with this low volatility, with this high volatility, there leaves a lot of room for profit making. I'm going to continue here. However, XRP Hodor doesn't agree with this assertion and says XRP has a better chance than Bitcoin. This is because of the rising liquidity of XRP. He also believes that the daily volume of Ripple is similar to that of BTC by May 2017. This was when the cryptocurrency averaged $1 billion in one day. This implies that the growth was almost the same percent as the peak of Bitcoin last year in December. Ripple is now large enough to move larger values through the network without resulting in volatility. Considering the track record of the cryptocurrency, XRP accomplishes all it sets out to do. It has been able to achieve all of this in a relatively short time. The company came about in 2012 and we're in 2018, so it's only been 6 years, and we've already seen tremendous progress and growth for Ripple and XRP. This may be attributed to the fact that Ripple is a private company and they don't have to follow some rigorous processes. Making the right partnerships. Lots of analysts have praised Ripple for making all the right partnerships. CryptoMap CEO Craig Cole says Ripple may be the catalyst that makes cryptocurrencies mainstream. And Bitcoin brought a lot of recognition to the cryptocurrency space, but I think Ripple and XRP are going to take it to the next level, and that's because of their cooperation with institutions and banks. XRP being super scalable and a whole lot of other stuff too. But that's just a few of the things. The company is helping financial bodies save costs due to to its quick transaction speeds and ridiculously low fees. Other cynical experts believe that BTC will never overtake gold. This is because it doesn't have other uses aside from being a virtual currency. Gold, on the other hand, can be used commonly for medicine as well as jewelry. Maybe Ripple will change their opinions, including the latest development with BPG Group. More investors will benefit from using the eMetals platform to trade gold due to its transparency. So you can see a lot of interconnection between the commodity markets here, the metals markets and digital assets and XRP in particular. And I think all of this is just is going to really show in the price of XRP in the future. I think years to come, it's going to be really tough to predict what XRP can do. I think XRP has the potential to reach the triple digits, considering how small the market cap is right now and how much how much capital is still waiting to enter into this space. So I hope you all enjoyed this video. A lot of potential for XRP. In my opinion, I think people are going to make huge gains that we really could not have imagined. I think this may be similar to investing in Bitcoin way back in like 2010 or something. I think there's a lot of potential here to make serious life-changing profits. And yeah, I hope you all enjoyed the video. Again, I'm not a financial advisor and no expert. I simply just do my research and I look at what the big investors and the big players are saying, and then I try to piece together my understanding of what I think is going to come. And I think for XRP, there's a really bright future. And yeah, that's pretty much all I have to say for this video. Hope you enjoyed it, and I'll see you in the next one.